And so these countries like China and India and Russia and Cuba and so forth, they will keep more reserves in gold than everything in dollars. This is the reason gold is sort of moving up or creeping up. Now, I'm not saying that there won't be a correction in gold, but there has been a steady flow of money out of the gold market or from people who say gold is overbought and too high and so forth. It is relatively high compared to, say, the price of wheat or soybeans and so forth, but it's not that high compared to all the monetary assets. They go and ask your friends, go to the pub and ask your friends, have you heard about gold? And they say, most people will say, yes, gold is going up. And then they will say, well, I have some gold. Or the wife will say, usually the wife say, we have some gold. Then you ask specifically, well, how much gold do you have? And then they will tell you, well, I have a few coins. But who has 20% or 30% or 40% of his assets in gold, silver, and platinum? Hardly anyone. We have some gold. When the wives of people say that, they mean they have a gold watch or they have a few coins. But very few people, if they have, say, $20 million, would have, say, $6 million or $10 million in gold. Very few. Or
Yeah.
take a billionaire. He has $1,000 million or $100 million. How much gold does he have? Maybe 1 million in gold? Nothing. The portfolio managers, 70% have less than 1% in gold. I'm just saying, we don't know what the value of gold is precisely. But all I can say, if I look at the investment community, and I have a lot of clients and I know a lot of people and so forth, most of them have no gold. Most of them have no gold, nothing.
So that leads me to ask then, will there be a switch with the general investment community and the portfolio managers? Will they switch to allocate more money to gold, in your opinion? And if they do, if and when they do, that would further drive up the price almost exponentially. Is that your opinion?
I'm not sure it will drive the price exponentially higher, but I can assure you that 95% of fund managers, especially because the fund managers nowadays are mostly young people. Nothing against young people. They have also their qualities and they may have performed well. But I'm saying especially young people would have practically no gold exposure. Practically no. Because they were all in SPACs, in meme stocks, and lately in the Magnificent Seven stocks and so forth, in NVIDIA and Tesla. They don't own companies like Newmont Mining and Barrick and so forth.
Yeah. So my next question really then is, the mining stocks like Newmont and Barrick, they really come to life, or they seem to come alive into life in the past, really since January, mid to late January. And the S&P, the broader market it looks like it's breaking down or it's rolling over. What's your opinion on that? Meaning, why is that? And it looks like, do you think that the mining stocks will continually to catch a bid up if we have a rollover in the broader market?
Well, this is the first bull market in gold where actually the physical has outperformed, say, gold stocks. Now, lately it's improved. Say, gold is up this year by about 10% or so year to date, and the gold stocks have rallied a bit more, the GDX, the gold mining ETF. But by and large, gold stocks in past bull markets have rallied significantly more than the metal. This hasn't happened yet. And I don't have the full explanation, but I can see why this is the case. Let's say if I have money and I have lots of money, say 100 million or a billion, what is my concern? My concern would be the financial system. Will it stay alive? I mean, we all know the way it is now, with all the deficits in the world, with all the debt accumulation, is not going to survive forever. Some sort of a crisis will occur. And then if you're wealthy, if you have 100 million or a billion, you say, so if there is a crisis in the financial systematic crisis, how do I protect some of my reserves? And you say to yourself, in the case of such a crisis, what I want to have is some physical commodity that can be easily stored and, say, hidden. So you buy gold and silver and platinum. And you buy it in physical form because the physical, yes, they can take it away from you. But it's a question of how easy is it for a government to take everything away from you if they don't know where you keep it and that you have it. I mean, you just can't go at cocktail parties and say, oh, I buried it in my garden. I have 3 tons of gold. Because if a tax officer is there at the party, he will react to it. But this is the way essentially some wealthy people think. They're very wealthy on paper, but it's paper. And they are worried about the paper, the system. And if the system breaks, what do you want? How do you want to protect some of your wealth? You can protect it in your house, but the house is visible to government officials. They can tax it away from you. Yeah, property taxes, and then you know they can make it difficult to own anything. But I'd say wealthy people, they probably have 5 to 10% of the money in physical gold. Eventually, they don't have it yet, but when they really think about it, they will have. Yeah.
Let me pivot a little.
It's actually funny, because in the 70s, when I started to work in 1970. The saying was, you put of a portfolio 10% in gold and gold shares. 10%. That was kind of the accepted norm. But recently, I never heard that a portfolio should be even 5% in gold. But I've heard a lot about Bitcoins and, other cryptos.
Yeah, I think that's going to change. I think there will be a shift to physical.
Yes, I agree.
Yeah. So the stock market, it looks like it's rolling over, and it looks like things are slowing down. Would you say that is it foreseeing a possible recession, or are we already in recession? And then it leads me to that question. the question of what is the Fed going to do? Because inflation's already high, but you have a slowing economy. What are they going to do? So those are two questions there.
Well, my view has been that about since last summer, the economy is actually in recession.
Already.
Because as you know, the government, they calculate GDP and its growth. And then they take into account that consumer prices go up. Consumer prices are for goods like cars and so forth, and for services like travel expenditures, hotels, and so forth and so on. Insurance premiums that are services. And then they take the rate of growth of the GDP and adjust it for the so-called consumer price index of personal consumption expenditures. And then they come out with a figure that shows, say, 2% growth, or 3%, or 1%. But you can see right away that this